Welcome back to Market on Close. I'm Marley Caden. Let's discuss the commodities market. Bring in our next guest, Philip Streible, the chief market strategist at Blue Line Futures. Phil, thanks as always for joining us. Now, first, let's talk about yields. The treasuries fell following that weak report we got from the jobs report today. 10-year touched a low it hasn't seen since April. 2-year reached a 5-month low. What were some of your takeaways today?
Yeah, what an incredible move it was, especially when we broke below that 4.20%. The swaps are now pricing in about 50 and 75 basis points of cuts by the end of 2025. You look at the CME's Fed Watch tool, that FOMC meeting on September 16th and 17th, they got an 88% chance of a 25 basis point interest rate cut. And what's really unique now is that we're seeing about an 11.8% chance of a 50 basis point cut at that September meeting. So again, the 2-year treasury yields fallen about the lowest level 6 months. But if you really look back, that was that tariff sell-off in April. If you go back, it was about last September. And while today's labor data was quite important, traders do also have to remember that the Fed has a dual mandate. Additionally, the inflation data, CPI, next week on September 11th. And if you look at nowcast models, they're going to show a reacceleration of inflation heading into the rest of the year. So what should happen is that 50 basis point interest rate cut that's being priced in, the 11.8%, that should start to slowly go away. And then those probabilities of October interest rate cuts, that should narrow a bit too. So I was looking at some put spreads on the 10-year treasuries as a potential hedge against, some of those longs like gold, Russell, and other interest rate sensitive products.
All right, and you mentioned gold. We saw it took on another powerful rally again today, as we've pretty much all but confirmed the rate cut is coming here. And I'm not sure if you saw, but Goldman Sachs also put out a note saying that it thought gold could rally to $5,000 an ounce if the Federal Reserve's independence is in any way damaged and investors shift in any small way from treasuries into gold. What are your thoughts there?
Well, I could tell you that, we are hitting those fresh record highs, and it's going to be my wife's birthday. So I bought her a gold diamond necklace, and I couldn't believe the price of that thing. It was quite incredible. So even the jeweler was talking about the rising prices of gold. And at what price does gold get too high where people start to shift to those other metals like silver and platinum and whatnot? So, we're looking at when you go back to your point with the Fed, can Trump have legitimate grounds to remove Fed Governor Lisa Cook that could bring those additional interest rate cuts going into next year back on the table? And then that main catalyst here is for that overshoot where we get over the 4,000, the 4,500, the 5,000 mark. So it is possible, but I don't know what kind of destabilization it would do to our treasury market, but also the S&P if you really see that Fed independence really questioned.
Yeah, certainly much broader concerns there, too, outside of the gold market if we were to see any destabilizing in the independence there. But gold is such an interesting story, rallying more than a third, hitting these records, consistently hitting these records, moving the Fed independence off the table here. How high do you think we could see gold go? And also, happy birthday to your wife and bravo to you. We love gold and diamonds, so well done.
Oh, thanks a lot. So realistically, we had a year-end target of about 3,800. It tends to overshoot back and forth. The dollar index continuing to break down acts as a tailwind. Obviously, treasury yields selling off so much that also acts as a tailwind to the gold market. My only question is that, you get such a breakdown so dramatic in 10-year treasury yields. What often happens is they do consolidate and then they kind of bounce back. Why did they go back? Because they're oversold and they snap back. They start looking for some type of excuse. Could traders come in and start taking profits on gold? Of course they could, and they could start rotating into other assets, especially if U.S. equities continue to go up. I think that the biggest threat to the gold market, so I do think that we're going to continue to move up, is that the Fed reassesses its dovish pivot because of rising and accelerating inflation. And then that's when you get gold futures starting to pump the brakes, because again, now it's looking at 50 basis points as a potential interest rate cut. What if there's only 25? What if the terminal rate is a little bit higher than what's forecasted? Gold has to adjust to those different things.
All right, and let's move now to crude to close out. Seeing some weakness in oil prices. It's declining into its third session, on track now for a weekly loss for the first time in 3 weeks on reports that we may see higher supply, and OPEC Plus is actually going to consider raising production. What are some of your thoughts here?
Yeah, we've been spotting on this one. We're thinking that, prices are going to break to that like $55 to $60 range, and we're starting to work in that direction here. The obviously OPEC plus, that's going to be a catalyst of it. This week jobs data, that also plays a role on it. I mean, I'm surprised that I didn't hear the word recession being thrown around with such weak numbers coming out there. But really, Saudi Arabia, they want to boost production in an offset because of the lower prices. So they're increasing their volume. And what are they doing? Well, this is all about market share, and they're starting to steal some of it. So you got WTI down about 14% year to date. I really don't see much of a catalyst to turn prices around. I think that it's becoming somewhat like a dead commodity here, except for that downward movement, because geopolitics hasn't boosted it up that much. We still want the shale producers producing over here because that makes everyone happy, with the current administration. So it just seems like lower oil prices is probably what's going to occur.
Yeah, I feel like we have this conversation every time, and every time we talk, it's just a little bit lower unless something geopolitical has happened. And every time we talk about that base case being in the 50s, are you still seeing mid 50s sort of as your range through the end of the year?
Yeah, I mean, I just don't see what could take it up, because we had the worst case scenario geopolitically, and it couldn't get over $80. So, anything above there is out the window. 72, maybe that's the top end of the range. We just bounced to another lower high, about 66. It was a failed breakout attempt. Now we're rolling over. There is a trend line that comes in from that March low, and you kind of draw across the low that we just saw in August, and then connect it. That's where we're at again. But if we break here, realistically, it's going to be $57.50, I believe, is where we're going.
Well, Phil, thank you so much. And please wish your wife a happy birthday from all of us at Schwab Network. And I have a big birthday on October 14th, since we now know you're a very good shopper. And I also like gold and diamonds. So just something to keep in mind while we continue talking commodities together. That's Phil Streible from Blue Line Futures. And coming up.